What's up, guys? Welcome to today's video. Welcome back, everybody, to a brand new episode. Welcome back, YouTube. Thanks for chiming. What's up, everybody? Welcome to today's video. We got a hot one for you. We're going to be talking about Bitcoin. Yeah, that works. If you're watching this video, you probably found your way here because Bitcoin has been all over the news the past couple of weeks. It's been breaking record highs left and right. I've been investing in Bitcoin and cryptocurrency personally for about the past 4 years or so I thought this would be a good time to take the knowledge of what I've learned, condense this down into sort of a 101 starter version of Bitcoin and cryptocurrencies for anyone out there who's looking to get started. If this is your first time visiting my channel, welcome. If you're a repeat customer, welcome back, and I'm glad to have you. Here on Fisk Financial, we're going to talk about all things personal finance and investing. So if these are topics that interest you, please go ahead and hit that subscribe button and make sure to click the notification bell so you know anytime I post new content. And if you like what you see and hear in this video, please go ahead and click that little thumbs up button. That helps me out a lot, and it also helps the YouTube algorithm know to promote this kind of content to others that might be interested. So that's it for my little PSA. Click that little like button. Thanks. In today's video, we're going to start with the basics of first, what is Bitcoin and cryptocurrency, and also how was it created, where did it come from, and we'll work our way up to talk about how you can obtain Bitcoin yourself, and also talk about some of the pros and cons of investing in Bitcoin. So first things first, what is Bitcoin? Well, Bitcoin is by market cap the largest cryptocurrency in existence. It was also the first of its kind and is essentially a completely virtual digital currency. So that is to say there really is no physical Bitcoin. It really is just numbers on a screen, which isn't that far removed from our current financial system. If you're looking at your bank account app on your phone and you see a bunch of digits and numbers, it's kind of the same thing. The main difference though, if you go into your bank and ask for X amount of dollars, they will hand you those physical dollars. So those numbers on your screen in your banking app represent those physical dollars. With Bitcoin, there is no physical representation of that. It is simply the numbers on the screen. Now, there's obviously a lot of behind the scenes that goes into making up those numbers on the screen, but we'll go into that a little bit later when we talk about how it works. You're probably wondering about this time, where did Bitcoin come from? Well, Bitcoin was first published back in 2009 by someone or something named Satoshi Nakamoto. Now, the person or alias Satoshi Nakamoto is shrouded in a lot of secrecy. We don't really know specifically who this person is, or even if it was a single person, it could have been a group of persons. And many people have claimed to be Satoshi Nakamoto over the years, but no one has ever been confirmed to be the real Satoshi Nakamoto. So we don't know who Satoshi really is, but he was the creator of Bitcoin and continued to work on the project for a couple of years when he finally dropped off the scene in late 2010, never to be heard from again. That obviously makes for a really great backstory for Bitcoin. We have the largest cryptocurrency in the world with a total market cap that rivals those of the biggest companies in the world, and we have no idea who the creator was, or at least where he is. So anyways, enough about Satoshi. Let's get into how Bitcoin actually works. So Bitcoin works off of what is known as a peer-to-peer network. So no one person actually owns the Bitcoin network. Rather, there are thousands of computers all across the world that are confirming the transactions made on the Bitcoin network. And while there are actually developers that work on the Bitcoin network, they can't force any changes they want. So they can't generate Bitcoin out of thin air, they can't move Bitcoin around without people knowing, because all of those other thousands of computers attached to the network that I talked about, they all have to verify transactions. And if there's fraudulent information put into the system that they don't all verify to be the same, then the transaction won't be processed. So this all takes place on the ledger that I talked about. The ledger is actually what is known as the blockchain. This ledger keeps track of every single Bitcoin transaction ever made. So because all of these peer-to-peer networks are reading off of that same ledger, they all need to verify the exact same information in order for a Bitcoin transaction to be processed. Now that doesn't mean there's someone sitting behind a computer halfway across the world clicking, yep, approve that transaction. That's not how it works. It's actually all done by computing hardware, much like you would expect a normal bank transaction. This process of verification is referred to as mining, and the people that are running those mining rigs and computing hardware are getting a small fraction of Bitcoin as a reward for doing this process. This is how Bitcoin is able to sustain itself without the backing of a corporation, because there's incentive for these people to continue their mining rigs and continue confirming transactions as they get rewarded with Bitcoin in the process. All of this process, in essence, makes up one of the biggest benefits to Bitcoin, and that is that it's a decentralized currency that cannot be impacted or influenced or manipulated by a government entity or corporate entity because of this peer-to-peer network. It's all independently verified by people who don't know each other and can't collude for a common cause. So with that, let's dive into some of the other benefits of Bitcoin. The first big benefit on the pro list is payment freedom. Bitcoin can be sent anywhere across the world, anytime. There are no bank holidays with Bitcoin. There are no currency conversions with Bitcoin. It can be sent to anyone with a Bitcoin wallet, usually in a matter of minutes. Another big benefit for Bitcoin is its low risk to merchants or companies that you're buying things from, because transactions with Bitcoin cannot be reversed. So with Bitcoin, merchants don't have to worry about fraudulent charges. Someone who might buy an item on a credit card, receive that item, and then cancel that transaction or say they never received the product, therefore getting their money back from the company and being able to keep the item. None of this can happen when the transaction is not reversible, like Bitcoin. Bitcoin is also immune to inflation, much unlike our current US dollar currency. If you've been paying attention, you probably noticed that the Fed has been printing money like crazy lately. There's money going out for individual stimulus packages, to support businesses, for corporate bailouts, and that money's not coming out of circulation. It's literally being printed on the money printer at the Federal Reserve. So every extra dollar that gets printed and put into circulation is literally devaluing the value of the rest of the currency. This is a known issue with fiat currencies like the US dollar because they're really not backed by anything, especially since the 1960s when the US went off of the gold standard and inflation really was able to run rampant. We've seen the value of that dollar consistently go down about 2 to 3% a year. And inflation is the reason we see increased prices on the cost of goods, housing, you name it. Quite simply, your dollar just doesn't go as far when there are more dollars put into circulation. So why do I say Bitcoin is immune to this inflation issue? Well, it's because Bitcoin is capped, so there can never be more than 21 million total Bitcoin on the Bitcoin network. Let's talk about those mining machines that I mentioned before, the ones that are approving Bitcoin transactions. Well, they also serve a secondary function, and that is that they mine the Bitcoin network to unlock additional Bitcoin. These mining machines are forced to solve complex mathematical equations, and once they solve enough of them, they unlock a block on the blockchain, which awards them Bitcoin. The total Bitcoin awarded for these blocks is constantly being cut in half once the miners reach a certain block on the blockchain. And this halving will keep taking place all the way until the last Bitcoin is mined, which, by the way, isn't expected to happen until about the year 2140. So we've got a while to go before every single Bitcoin is in circulation. However, about 18.5 million Bitcoin have already been mined, so that leaves us about 2.5 million left. So again, because the total number of Bitcoin can never go above 21 million, that makes the currency immune to inflation because you cannot produce any more of it. In fact, Bitcoin can become somewhat deflationary because you can take Bitcoin out of circulation. It's estimated right now that anywhere from 3 to 4 million Bitcoin have probably been lost forever. People who have lost their wallets or lost their codes to get into them. So if that number is to believe, then really there's only ever possibly going to be like 17 to 18 million Bitcoin in circulation. And the last pro I want to talk about is that Bitcoin can be divided up into fractional amounts. So a lot of people might think that you have to buy or spend one Bitcoin at a time, and that's just not the case. Smaller fractions of Bitcoins, or bits, can make up an entire Bitcoin. There are 1 million bits in a Bitcoin. So this fact really makes Bitcoin a little more palatable as a future currency, as you can divide Bitcoins up into those fractional amounts to pay for day-to-day necessities like groceries or whatever it is. So we can't talk about the good without talking about the bad, so let's get into the cons of Bitcoin. Bitcoin is still extremely volatile in price fluctuation. Just the past 4 weeks tell us that alone. In mid-December, Bitcoin was hovering around $20,000. By early January, 3 weeks later, it had reached its new all-time high of $42,000 per Bitcoin. So it more than doubled in value in a matter of weeks. Consequently, today, Bitcoin's sitting at around $33,000, just a week off of its all-time high. So just as fast as it can go up, it can go down. And this is totally normal for Bitcoin. These price swings have happened all throughout its existence. The only commonality thus far, and really kind of interesting point that makes Bitcoin such an interesting option for investment, is that every time it's swung up to a new all-time high and then swung back down, it's never quite swung as low as it did the time before. And then the next time it swings up, it seems to go even higher, and swings down not quite as much, and higher, and so on and so on and so forth. So you can really start to understand why so many people are interested in something that 5 years ago you could have bought for $200 and today is worth $33,000 plus. So that's probably the biggest watch out for Bitcoin and cryptocurrencies in general. The next one is that it's still very much an emerging technology. So think about this, Bitcoin has been around for barely 12 years. And it's really only been relevant as a payment or investment option for less than that, maybe 5 years. With anything that young, we just don't have enough information to accurately predict what the future is going to look like. If we wanted to invest in something like the stock market, we can go back and look at literally 100 plus years of data to say, hey, this is probably going to return me about 10% a year on my investment. But with Bitcoin, we have no freaking idea what it's going to do tomorrow, let alone a year from now. That alone makes this a very high risk investment. Possibly very high reward, but also very high risk. Another watch out here is that the future of Bitcoin as the king of cryptocurrency is still highly speculative. While the market has seemed to pick Bitcoin as their winner for right now, there are hundreds of other additional cryptocurrencies, all with various capabilities that we really don't know what they're going to do in the future. For instance, the next biggest cryptocurrency besides Bitcoin is Ethereum. Now, Ethereum's only trading at about $1,000 per Ether, while Bitcoin is $33,000 per Bitcoin. That's a pretty big gap, but we know that Bitcoin only got there within the last few years. Ethereum is younger than Bitcoin, and some might even argue more technologically advanced in its capability. So we really don't know what this market is going to look like in a year, 2 years, 3 years from now. And it's not transferable, where if you own a bunch of Bitcoin, you can trade it in for Ethereum. Well, you can, but only at the price that it's currently trading at. So suffice it to say, if you buy a bunch of Bitcoin, or other cryptocurrency for that matter, you better hope that it wins in the long run. And the last con I want to talk about here, and really could be viewed as a pro depending on who you're talking to, but Bitcoin requires a private key in order to make transactions. And a private key is a long string of numbers and letters that acts as your digital wallet for Bitcoin. If you lose access to this private key, if you lose it, if you throw it away by accident, your Bitcoin are gone. You will never get them back. It's not like going to the bank and saying, hey, I lost my debit card, can you give me a new one so I can access my money? That one single private key was the access to your Bitcoin, and if you don't have it, it's gone. I will say that's one aspect that makes me kind of nervous about holding Bitcoin. Now, I'm careful, and you gotta back that stuff up, but there are plenty of stories of people out there who have lost fortunes because they threw out a hard drive or lost the little scrap of paper that had their private key on it. So with all of that, if you're still interested in Bitcoin, I want to tell you how you can get your hands on some and what to do with it. But before we get into that, I want to give you my personal recommendation on this, because after all, this is a personal finance channel and not a get rich with Bitcoin channel. So here's kind of my personal philosophy on it, and I like Bitcoin. I'm not a Bitcoin hater by any means. As I said, I own Bitcoin. I've been purchasing for about the past 3 or 4 years. But because of the extreme risk involved with this and any other cryptocurrency, I can't advise anyone to go out and spend their life savings on Bitcoin. It's simply too volatile and still too unpredictable right now to really be a sound investment or store of value. So if you're still interested and want to get into it, what I would recommend is to put no more than 5% of your net worth into cryptocurrency as a whole, whether it's Bitcoin or any of the numerous altcoins out there that you may research. Why 5%? Well, because if Bitcoin does what the fanboys think it's going to do, essentially become the new reserve world currency in the future, then a 5% investment today is going to pan out really well for you. Think about it. If literally everyone in the world is using this as the new currency, yeah, it's going to be worth a lot. So even that 5% is going to be a big chunk of change for you. On the flip side, if Bitcoin goes completely the other direction and this whole thing turns out to be a failure and just a wasted experiment, well, then it's only 5% of your net worth. So it's really not going to affect your life too negatively. You're not going to be demolishing your entire retirement savings. You're probably going to be okay. In fact, it's probably not going to change your life very much at all. So just that 5% gives you potential huge upside. And, nobody wants to lose money, but the downside is much less bleak than if you go all in with your entire savings. So all that aside, how do you get Bitcoin? Well, there's 3 main ways you can do it. One, you can start competitively mining Bitcoin by getting a mining rig like we talked about earlier. This probably isn't the way to go if you're a beginner. Number two, you can open a Bitcoin wallet and look for someone in your area that wants to sell Bitcoin. This I also would not recommend for a beginner because if you really don't know much about this technology, it's easy to get scammed. And as I talked about earlier, the transactions are not reversible. So once you give someone the money, they could just up and leave you with nothing. So the third option and most popular is that you can buy Bitcoin on online exchanges. The most popular by far is Coinbase.com. In order to set up an account with them, you are going to have to share some information. I think they make you scan a driver's license, social security number, that sort of thing. But it is all very safe on Coinbase. They've actually just filed to go public, so there's plenty of regulation around them. You're not going to get cheapskated there. And there's also tons of other exchanges. Another one that I recommend is Binance, B-I-N-A-N-C-E. Or you can even, if you have the Cash App for like paying your friends back, you can buy Bitcoin through Cash App. I've done that plenty of times, it works great. So now that you've bought some Bitcoin, what do you do with it? Well, you're gonna have to store it somewhere, and listen to this part because it's really important. Do not store your Bitcoin on the exchange where you bought it. So if you bought Bitcoin on Coinbase.com, you need to pull that out of there as soon as possible because Coinbase is holding your private keys while they have your Bitcoin. And exchanges are susceptible to being hacked. It's happened in the past, and hackers can end up stealing your Bitcoin if that's where you're keeping it. So you can move your Bitcoin off of these exchanges to something called a hot wallet. Hot wallets are not really recommended for long-term storage or large amounts, but we should touch on them because they do have a function. They're basically identified as any wallet connected to an internet device. So if you have a program or application on your computer or your smartphone, those would be considered a hot wallet. And the application they have is that they're useful for making small transactions or daily transactions of Bitcoin, but you don't want to hold a lot of money in them because, again, they're susceptible to being hacked because they are connected to the internet. The main way that I would recommend for you to hold your Bitcoin or your cryptocurrency is what is called cold storage, or basically a hardware wallet. Hardware wallets can be connected to a PC when you need to move your Bitcoin, but they usually use an interface when connecting that doesn't share your private keys with the internet connected device. The three hardware wallets that I would recommend are KeepKey, Ledger, and Trezor. These are all great options and work fine, so really just get online and figure out which one works the best for you. Buy that up. It's going to cost you a little bit of money, but I think KeepKey is like 50 bucks or something, so nothing crazy, and you're definitely going to want to do it because it's a safe way to keep your cryptocurrency. One last way to do this is through paper wallets. Paper wallets can be generated on certain websites, and you literally print a private and public key. That key is then holding whatever amount of Bitcoin that you put on it. So these are a solid option. You just want to be careful that you're not losing these little scraps of paper. So I don't know about you, I like the hardware wallet personally myself because I just feel like I'm not going to lose this little device that I know has a function versus a piece of paper that I might put in a stack somewhere and end up accidentally throwing out. So to each his own, but yeah, I would go with the hardware wallet personally. Alright guys, I'm going to cut it there. There's a lot more to Bitcoin than we can really cover in this video, and frankly, I don't consider myself to be an expert. So maybe if there's interest down the line, we'll do another series on Bitcoin and go a little deeper, or maybe some other cryptocurrencies. But hopefully you learned a bit here and feel a little more comfortable dipping your toe in the cryptocurrency waters. Make sure to like it if you liked it, and go ahead and subscribe as well, and we'll see you guys in the next one. Thanks.